Okay, so let's look at recognition of costs for plant. We have a list here, a schedule, and we need to look at which one of these we are going to put to CapEx and which one are just expenses. So we've got the cost price of the machinery, import duty, delivery fees, installation costs, pre-production testing, 5-year maintenance contract, and training for staff. As well as these, we've been offered a 10% trade discount on the machine price and a 5% early settlement discount. So which out of all of these are CapEx? Well, we need to think the main overarching principle of CapEx is that it's to bring the machine to its current position, its current location, and ready for use. So we can just add these straight across. Obviously, the list price of the machine. The import duty, well, yes, we'd have to pay that to get it to the right place. Delivery fees, so yes. Electrical installation, well, it's not going to work without installation, so that's fine. Pre-production testing is fine. And that's pretty much it. So we could add that up as we are, and it would come to a figure of 99,950. Now, we'll accept the trade discount, and the trade discount is or comes off just the list price of the machine. So if we just add another line in here, we can just take off our trade discount, and that's 10%. Oops. 10% of the list price gives us a discount of 8,200. Make sure that's added in. It is. So that gives us a CapEx amount of 91,750. What about our early settlement discount? Well, early settlement is not capitalized. This just comes off the list price, and this will be, if we add those two together, comes to 73,800. In fact, I'll do that here. Add those two, 73,800, and that becomes our final holding value, or our net book value, for the any depreciation costs. So that is the cost to the business. We've taken the trade discount and it's entered into the books as the first entry at 73,000. The early settlement discount of 5%, or we can have a look, see what that might be here. 5%. Oops, it's 5% of 73 plus 5% times 0.05 is 3,690. That's not taken off this figure, and it just goes to the other income. What else do we have? Well, we have the maintenance contract. That wasn't included. So maintenance contract, what do we do with that? Well, if we pay it outright in one go, 7,000, it's just an expense. So it's an expense. And if we pay the whole lot outright, well, we have to spread that across 5 years. So we'll make it into a prepayment perhaps for each of those years. So there'll be 5 times, well, let's just work out what that divided by 5 is. 1,400. So it'll be 5 yearly costs of 1,400 for the maintenance expense, and we'll put the other 1,400 into a prepayment account, or 4 times 1,400 into a prepayment account. And the training for staff training, that, let's just tidy that up. Training for staff, that's just a simple expense, and it's just as it is in the year it was incurred. So that's it. That's our whole list. We have deducted the trade discount from the list price to give us 73,800. All the other fees are to bring it into the location and state ready for use. The maintenance contract is just an expense, it's not capitalized. So that will be 5 times 1,400, 5 years worth of 1,400. And we'll put 4 of those into a prepayment account for the subsequent 4 years. And training is just an expense incurred in the year of installation. So that's it. If your question was asking for what's the capex amount, it's this 91,750.